Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, February 7th, 2017. So things actually kind of went as planned on this, and what I put in the morning notes was that I was anticipating that we were going to get some kind of top today. Now we were up. Actually, it'd probably be easier showing you on a different chart. So you can see we gapped up. We made it up to the 22.99, and then from there we saw pretty much selling. So this was a higher high than this. So what happens is we now have bearish divergences on the 15-minute chart. We have a failure of breaking out right now. Obviously, that can change. But when you take out these previous highs and then you make your run for this, you want to see that if it's going to be a clean breakout, it's going to go right through it. And that failed. And then from there, we closed the gap. So when you close an opening gap, whether it be on the downside or the upside, it usually means that it's a weak move. And you can see this gap right here wasn't filled the first day, but this one here was filled today. So it's all part of the like I've been saying, the topping process. It's a frustrating time in the markets, but it's when if you're patient and you understand or have an idea what's coming, you're able to kind of control your emotions, and that's really what my goal was. When we were down at these levels, I was saying I wouldn't be looking to add any shorts, and that this gap is most likely going to get filled. So it did it in a totally different manner than I expected, and we went a little higher than I expected, but it was anticipated, and that's really the main thing that we want to just keep an eye here on. So we didn't take out these highs. We came back down. We actually closed closer to the lows than the highs. And really, the first task at hand for the Bears to get any kind of real not real panic, but let's say the first line in the sand is going to be this 2288 level, which is right here. If it breaks through that, there's support at the 2283, but that's just a 15-minute moving average. Most likely, they're going to come down and close the gap at the 2281 if this gets taken out, and I actually believe it's going to. So we have bearish divergences. We have it was a strong open, weak close. It means that things are very, very tired right now, but it could change. Maybe they gap it up tomorrow. We have to wait and see. But it's part of the whole topping process. So if you look on a 15-minute chart here, I meant a 60-minute chart, you can see the high here made a bearish divergence. So now we have a second set of bearish divergences, and it's when we were down here, what one of the things that I've been saying was that we usually come up and test the highs, and it's just the way it's been for a very long time. Is that when we've had a high and we've had a drop, it usually comes up, and what it does, it gets the bears don't believe that the market's ever going to head down. The bulls that are waiting for a pullback to jump in figure that, hey, it's not going to pull back, and they all start chasing. And then from there, everybody's either they're not short enough the market or they're too long, and that's what gives us the panic moves to the downside. Until we have that, it's just kind of it's part of the whole topping process that's taking place. So we still have the five waves here, 1, 2, 3, 4, 5. That's looking for a move to come someplace down to the 2192, 2166. Excuse me. So that's really the target area that I believe we're going to be going. It could be going lower than that, all the way down to the 2130. But first things first, really let's just wait for the breakdown. This is really, I would say, the first line in the sand that, as far as any kind of panic, is going to be this 2271 area, 2272. If they lose that, it's going to be a really quick drop back down to test these lows at the 2257. And it's when that gives way, when I believe that we're going to start taking out the 2231 and even lower than that. So until this gets taken out, it's just expect a chop fest, and that's really the best way to put this. But also know that in the coming days, weeks, that there's a larger move that's pending that should be taking us down over 100 points, and that's why I'm being patient with my short position. On top of that, we have bearish divergences on the daily chart. You can see the MACD is already starting to roll over here, as well as the bearish wedge. So nothing's really changed on any of that part of it. And, really, I think they opened today, and the close is just showing that this market's really tired, and it's looking for a rest. And a lot of people are just looking for that, just a little rest. But when we start taking out support levels, then that rest starts turning into panic, and it's when everybody starts, selling everything is probably when we want to start buying again. I don't think we're turning into a bear market, but it's going to be something that nobody's really used to, any types of declines that aren't bid up. So it's going to be I think a pretty good buying opportunity, but we're probably going to see 100 plus off the S&P before everything is said and done. So with that, today pretty much went as scripted, where I was expecting some type of high, and we got it. So let's just see if it keeps following the script, and if not, it still doesn't matter. There's still a larger move coming to the downside. So with that, have a great night, and I'll talk to you guys tomorrow.